Good morning. Hope everybody's starting off with a great day. So yesterday's 3-bar reversal that we spoke about continued to the upside. And the pattern that we spoke about yesterday was this bottoming action here. And you had the gap and the sell-off, and then the bottoming tail bar, and then this, trying to make a little head and shoulders bottom there, but you get the gist of it. And what I'm trying to point out here to everyone is that when you look at a daily chart, you can get an insight, and a pretty good one, as to what's happening on the intraday time frame. So this pattern suggested yesterday that the markets would move up. It doesn't tell you how much, but it gives you a bias for the upside, and had the gap up, and it continued to move higher. So now we've got this wide range bar, but you can see here, right, and it's a 24-hour time frame, but you could see what I'm talking about, you know, with this bottoming kind of action. There's your bottoming tail bar right there. And then the retests and the concept of going sideways, absorbing supply, bullish price action, creating support, and so on, and then off it was. And this is an hourly chart, so there were little wiggles, of course, on the 5 and the 2s. This gives you a bias, and you can just, you'll see the hourly just continue to move up, and now we've got a consolidation, which is typical of what happens after a wide range bar. Is that you normally, well, one of two things is probably going to happen here. We're going to get an inside day, and then we'll assess throughout the day how far it might retrace into the wide range bar, and how much. And as long as it stays in the halfway mark, we'll consider that to be bullish price action. If it dips down there intraday, the expectation is, based on bullish price action, that it'll come back up, and we want to see it close, ideally in the upper third. And then that could set up what we call a 1, 2, 3 continuation pattern. Sometimes you get a third bar, and then you get the continuation on the fourth. In any event, what we don't want to see is prices retrace and close all the way back down the below the wide range bar. And of course not to come down here. And as I'm explaining this, you might be thinking, well, yeah, Greg, that's common sense. That's what should happen after a bullish reversal like this, and a move up and a breakout. And the reason I'm pointing out the simplicity of this is because of all the complex explanations that revolve around candlestick names and indicators and so on. Is when you look at price patterns in this way, in what I call bar by bar analysis, and understanding how, several bars can create a bottom, and no follow through to red bars like this. All of that can guide you without all of the nonsense on the chart that the chart artists use. So as for today, based on the price action, as always, our first reference point of support is the prior day's low. And because yesterday was a wide range bar, we want to see it stay in the upper half, close in the upper half. Sometimes you get big retracements intraday, and then they come all the way back, and you get a tail there, and that's okay. We want to see the candle body stay in the upper part here. And so far we have that, because prices are consolidating. So the open is going to be down a little bit. You can see the futures are down a bit. We'll take a look at that. So the open is going to be a little bit of a gap down, but buyers should step up on the gap down. And wherever it sells off to, they should step up and push it back up. Now, the concept of the void, right, the momentum move, is the weakest link in the chart. It shows the strength and the power of the move, but it's the weakest link because there's no reference point of support. So buyers have to create that support, and that's exactly what's happening here pre-market. Got a dip down and a bottoming tail, a dip down and a bottoming tail. So if it goes sideways all day today and it chops around, that's normal. don't get caught up in what I'll call a commission generator, where it's just chopping back and forth with opposing swing highs and lows, where it attempts to go lower and doesn't, it attempts to go high and doesn't, and you get a consolidation day, which I'm repeating is normal after a wide range day. And we'll see what happens. Qs, similar pattern, right? You got the 3-bar reversal, the bottoming tail, the gap down, the move up, and the breakout, which suggests it's going to go higher. It's into new all-time highs. So the void above, nothing to stop it. That being said, break down below this level changes the bias on the short term. Trend is still up. However, if this begins to accelerate and push higher, maybe up toward 200, I know that's far away, that's going to be a big sign of a blow off in the end of this move, and then some correction. So we'll see. Russell brought up the rear. I talked about that yesterday as a possibility because that's what it typically does. The Russell and the transports, they bring up the rear after underperforming. So it's in a trading range, as you can see, very far from the old highs, but we've got a larger bottoming pattern here. And so here, the left shoulder, the head, not really a head and shoulders because, it should be a bit deep lower here, but you can see what I'm talking about, this bottoming type of pattern. And so far, we'll just see if it can clear here. And if it does that, oh boy, that opens up the door into this void. Look at the move down, and we've got this big bottom and now this little sub bottom, let's just call it, right? So there's a V bottom. There's a larger bottom. And if it can break out, well, it opens up the door to a pretty substantial move. And always having two scenarios, if it breaks out, do not dare come back down to this level. Right? That would be a bad sign. Weekly chart, you can see the consolidation and kind of creating that support, the red bar ignored, same bullish, more consolidation kind of bullish price action going on here, pre-market. Wouldn't be a surprise to see, again, a narrow range day. Transports. Right? We got everything clicking here, to different degrees, of course, but prices are moving up. And so maybe transports, maybe they move a bit today. We got a big number right up above here, $200. So where it's consolidating, topping tail, bottoming tail, green bar, not the same kind of green bar. And this doesn't gap that much, intra-week especially, but this didn't have the gap down and larger green bar, right, like this. Right? So a little bit of a different pattern, but it is the transports. Nonetheless, you've got this rounding kind of a bottom, right, which you can see here. So if it can clear here, 200 would be the next reference point, and 210 is the old high there. And let's see if it can clear 200 first. MDY, the mid caps, we don't look at that as much, but kind of moves like the Russell. Well, actually outperforming quite a bit. But again, you've got this big wide range bar. So message the same. And, in the room, we can break this down, meaning we can look inside of this and see what's actually moving. Trader, to look inside there, which stocks are moving within that might be able to continue to push higher. And old highs are up there in the 380 level, maybe just below. Just below 380. But consolidation, we'll see if it can get going. So bullish there as well. And S&Ps, you can see the beginnings of the narrow range day. And so this was our minor support. See right, that was the high there. Prices blasted through. This would be our minor support level, subjective because directly to the left is actually nothing. This is doing what we want to see it do, right? Create new support, and that is the essence of the 1, the 2. If this turns out to be the 2, where it creates the support. And then the 3 is move higher. Right? Maybe this is on its way to 3,000. Right? We'll see what happens by the end of the week. Qs, same story. Right? Just grinding higher. Notice the topping tail, no follow through, wide range bar. Same pattern here, new all-time highs. Same thing going on. Right? Boring uptrend. I actually would love to see it just explode higher. That kind of big momentum move to the upside, and then it'll stall. Historically, that's what it does. I mean, that is what the essence of what we do as price patterns traders. We've studied thousands of patterns, seen what their reactions have been historically, and then we make an assumption based on historical patterns as to what is likely to happen next. So, for example, we see a pullback to support and a bottoming tail, followed by another bottoming tail. We don't need to have a name to it. We know buyers are stepping up on a dip, and it should go up to where? Well, should go up to resistance and see what the reaction is. Sometimes they keep going at resistance. Sometimes they pull back. And you get W type of bottoms. Right? And, Dow futures moving up. Robert wants to take a look at QCOM. All right. I think it would be pretty good if it pulls back, or normal if it pulls back after such a gigantic move. Obviously, this happened on news. Maybe that $90 level. Patterns like this are actually attractive to fade a gap, meaning, it's moved up so much, and let's say it was gapping up to 92 or whatever, then you go to your intraday charts and you look for some kind of a reversal pattern to short it. But yeah, I mean, when this pulls back, it could pull back pretty good when buyers finally say, "Ooh, this thing has gone from 55 to who knows where. Could be 90, it could be 100 before it starts to pull back." But when it does, people will take profits. That's how the market operates. And so we looked at the Dow. Bonds are actually pushing up today. Could be a fly in the bull case. But it would make sense for bonds to be up today and the market to be kind of choppy as it digests yesterday. And bonds being up could be a concern for the markets. We've talked about the yield curve in the past. So as bond prices move up, yields come down. And so it would make sense, bonds coming up and maybe the market chopping around today. So keep in mind as part of your bias that today could be a choppy kind of a day. But we'll look for what's moving. Gold clearly in trouble. You can see that big nasty reversal on the weekly time frame. That's actually the 60. But that's a nasty reversal. And now it's broken through this support here. And it looks like it's going to come down here. There was probably some short covering yesterday, but it couldn't hold so far. And so unless this proves to be a breakdown failure, which, we won't know until it actually happens, that could would suggest some kind of a counter trend reversal. But this is now failed. It's broken down through these two swing lows here, and that's bearish. So it would suggest it's going to come down even lower. Oil taking a little break, but looks great. Just hasn't stopped. We got this little resistance area there, which really isn't much of anything. We've looked at that the other day. Or it's just stalled there for the moment, but maybe $70. Who knows? You don't know what's going to catch the attention or stop a bullish trend like this, but you just go with it until it fails. So higher highs, higher lows, beautiful consolidation like we have here, created a pivot. It's moving up, a little bit of a stall day. So maybe this is going to stall too. Where bonds are up a little bit and all these markets that we've looked at are stalled here. And so maybe don't be too aggressive here today, especially until we actually see something starting to move, of course. But and things look like overall that we could be in for some chop here. So that's it from me. I hand it over to Mr. Gibby. Can review opens and caps.
Good morning, folks. Yeah, you know what, Mike, I was thinking this morning with all of these earnings going on, and then you ask yourself, hey, how is the market going to digest all of this? Guess what? You look at the spiders, and the market is discounting everything and saying, you know what, it's a wash. All those stocks moving pre-market. And there's arbitragers out there. I used to work with one, in fact, who does exactly that. He focuses on the NASDAQ 100, so he's looking at the value of all 100, compares it to the value of the Qs, and he sits there in ARBs. I watched him make $1 million one day on that little mini crash, as the media called it, where right at the open we dropped like 800 points. He said that the dislocation of the sum of the parts to the total was incredible. So he does very well. And in fact, he's now doing that same arbitrage business in the Bitcoin field with all the competing exchanges out there. All right, let's continue. We'll go through opens here real quick, although I have a ton of gappers I want to get to on earnings, but let's just do them real quick here. This is in the weekly options trader. We have a Lulu put spread. Actually, I closed out this Apple yesterday. We had 2 put spreads, and I only closed one of them. Netflix, we closed out. Mighty Mo. We have a call spread, it's fine. W Whiskey, we legged into a Condor with the call side stopping out yesterday, so we have a put spread only. Zallo, we have naked puts that expired this Friday, looks great. Now let's look at the swing and option trader. XOP, we're long it. Yum, we're long it, don't like the topping tail, but I tightened the stop. Merck, we sold a third into strength yesterday, under 75 bucks. And now with it gapping up, 30-minute high, I will move the stop tighter to today's low. OII, we bought yesterday right around these levels. TCBI we bought, that looks great. I tightened the stop. Charlie Lima, the deep retracement after breaking out, but we're going to keep the stop. Apple, we have a call debit spread. So we're long in the money 197.5. We're short the 207.5, and we're already up $2 divided by our cost basis is so Greg, do the math. That's 25 divided by 6. Just spitballing it. That's like 35% return, Greg, on our call debit spread. How do you like that?
That's wonderful.
And we have less risk by definition than trading the stock, less capital required. LYV, we're long the stock, it looks fantastic. Mickey D, covered call, looks great. Matador, long stock, looks fine. LDOS, long stock, looks good. OIH, long the ETF, looks good. SJM, we're long, looks good. And finally, XLU, we are short. That's fine, going nowhere. That's it. We had a ton of opens, and they all look pretty darn good. Zulu Mike, recent IPO. I saw it gapping up here, no pattern though. Oxy is buying APC, rallied off the low here, 59.50. I actually, my bias is always being like a contrarian on these big old gap downs. If, of course, as always, I see buying at the open and a bullish pattern, major support, and They're great put selling candidates. Manage 65.41, gaps too excessive. Remember, I'm looking for tier 1 setups at the open. Hey, remember, look at Boeing. I have it here in the upper right. Well, hold on. XHL, kind of hard to tell where it's gapping. If it's 75, it's too big. But I saw a little dot here at 71. And if this does open around 71, this will be a tier 1 day trade if it sets up, plus a no-brainer put spread if we can get something for the 68s. Boeing here, remember I said yesterday, there's a very high likelihood that we'll be able to get a call or put spread candidate. Look at this 15-minute pre-market. Tell me what your bias is, trader. Quick, we're out of time. That's a beautiful, beautiful tail. Was a breakdown, range expansion, slicing through resistance. This is a bullish retracement in the upper half of this. 380, there's still resistance here, so it's not a directional trade, but maybe 10, 15-minute high as long as these pre-market tails hold. That's exactly right. We're going to do a put spread for Friday. This is our factory work. Same work, different day, different setup. Kalu here is an aluminum company. No-brainer put selling candidate. So here, that one's worthy. Here's iRobot getting his clock cleaned. Kalu, he deserves a window. CSL gapping too big. SWK 151 gaps too big for tier 1. 178. That's the mess. We'll come back to it. To Mo 265.50. This is a put spread plus a 30-minute high candidate for a day trade. I like this gap reversal. So, you know, we gotta, like every morning, we're gonna need some big teamwork here. So the ones hopefully I'm saying are tier 1 setups. You know, we need folks to help us watch them. NVS 78.50. It's a bullish gap. It's holding well pre-market. Maybe day trade long and or put selling candidate. ATM 248, gapping down a little bit, but kind of neutral there, even though it's in a downtrend. Could be a call spread candidate. That's been part of the weak sector. I can't tell where this is gapping, but that's a bullish close, kind of a reverse head and shoulders, 100% retracement, engulfing close. I can't, it's garbage. I can't tell where it's opening. Navi 1270. If this is a long candidate, daily, weekly, monthly look higher, although the monthly target isn't not really big. 98.45, big bearish gap, but it's big, so we have to wait. This one I can't tell where it's opening. TSS, oh, yeah, no, that's an ugly gap. Yeah, but just because something's a pro gap doesn't mean it's tradable, because the gap could be too big or the target too small, whatever. FE, I can't tell what it's doing. 6 SIX, 53.50, fantastic gapper. 53.50. It's not too big. It's coming out of this breakdown failure. My rising 20, got a price void here to 56. That's the best one I've seen so far. Do y'all see that? I'm going fast because I have so many of them here and the market's about to open. 62, a nasty gap, that's excessive. MTH 50.20, I like this one too. It has room 53.54. This one looks great.